What's up, Banter fam? It's your host, Miles. Welcome back to the show. In today's episode, we're going to be talking about altcoins, going through our portfolios, looking at which coins will survive a bear market, won't survive a bear market, and giving you guys a strategy to position yourselves to succeed during these very volatile times. At the end of the show, we're going to be answering some questions and also revealing a chart, which I think is quite revealing for Bitcoin itself and might indicate where the future Bitcoin price is heading. Going to be a big show today. Welcome to the show. Sounds tricky.
Hey, what's happening, everyone? How you doing? Thanks for having me again,
bro?
Miles.
No worries. My fellow Aussie is back on the show with us to talk altcoins, talk everything crypto. I mean, it's been a very volatile market at the moment, hasn't it?
It has been rough. It's been up and down like the tide. It's coming and going. It's kind of super hard to predict. It's just no one knows what's going on. We don't know whether it's going up, whether it's going down, but it's just sitting in this range and it's just not changing.
But we do have an idea now. We do have an idea now because of some of these charts that we've been unpacking over the last couple of weeks. And I think we've kind of nailed down a really good strategy when it comes to altcoins. And that's what today's video is all about, giving you guys that strategy and kind of helping us position our portfolios for success and running through some of these major alts and look at, have the fundamentals actually change for a lot of these alts. So we did create an example portfolio, which has a lot of the common altcoins that you guys are probably holding. Maybe there are some altcoins that you're not holding that, you want to eventually get into. We're going to be running through, which are the ones that are looking strong and which are the ones that are looking weak and maybe you should think of getting out of. But right now, we are just experiencing this very choppy range. We pushed up to this key level, which is the 31,500 to 31,700 level, and we got rejected again. So we could see on this horizontal line here, we did get rejected twice, kind of forming this short time frame double top pattern, come back down into the range, and we're just chopping sideways again. I think interestingly, something I've kind of noted is Asia is actually waking up and buying, and then Europe and America seem to be waking up and selling.
Yeah, it's kind of, and it seems to be happening in that kind of time frame as well. It's like it's almost to the letter on that 12-hour kind of turnaround because the market's obviously 24/7. So I mean, and we've found a super interesting chart that we were digging before you and I. That we're going to show everyone at the end of the show, which can kind of help really explain what's going on. So it's probably worth sticking around to the end to check that out because this chart is super revealing that we've found. And yeah, it does really help with this explanation of why we're bouncing up and down and why we're stuck in this range.
Just before we get into altcoins and start talking the alts, comment of the day goes to Ted Blair. He says, "My mum says I'm cute. My dad says I should have been swallowed."
Oh, Ted.
Laugh just to get in the spirit of the show before we kick it off here.
That's hilarious. That was quite funny. That is hilarious.
All right. Run us through this chart. This is the chart you posted on your Twitter. This is actually the Wyckoff pattern overlaid over the current Bitcoin price action.
Yep. Yeah. So I think, look, it's about a week old now, but it really hasn't changed that much at all. Now, the kind of theory here, and I think what everyone is kind of expecting at the moment as well, not everyone expecting, but what a lot of people are expecting, I'd say 50% of the market, because at the moment, the sentiment is, to me anyway, feels split. Like we're 50% positive, 50% negative, but just a whole lot of sadness going on in there as well. But what the Wyckoff is kind of telling us and what a few people are saying out there is that we should be getting some kind of relief bounce soon. Now, that's kind of, I think, what we're basing this entire concept that we're about to present off. And if we don't get that relief bounce, well, sorry. Don't know what else to say. It's feeling pretty weak out there, but the price action always wants to be recaptured and it wants to retrace. So it's something to look at and it's something to think about. And look, realistically, things always retrace to where they came from. So the chances of this happening are good, but how high it goes is going to be what changes everything and how you structure what you're trying to do.
Yeah, well, I think the Wyckoff historically, it has been accurate at times, but obviously these patterns never fully play out to their full extent. But I think the gist of the logic here, I think, is valid. And that's, obviously there's likely further downside. I think, the macroeconomic conditions with quantitative tightening and hiking interest rates and, some very interesting figures from the jobs growth, etc., is kind of lending itself to lower levels across the NASDAQ. And, we all know how correlated crypto is to equities right now. So expecting lows is likely. However, in the short term, or at least over the next couple of months at some point, as the Wyckoff's suggesting, I do think it's a strong likelihood, and I know Sheldon and Ran are also in the same camp as me here, that we're expecting some sort of rally in the near future. Now, how high that takes us, whether that's just to 34, maybe it's closer to 40, we don't quite know yet, and we don't have the answer to that exact question. But if we are going to push up at some point, then we do need a strategy to prepare ourselves for when things get worse. Because if it does follow a pattern similar to this, it means we're going to get this spring around 24. I even think 19 to 20k would be in play in that scenario. So we have to set ourselves up so we're taking advantage of this rally and not just hodling bags and then letting them diminish back down to not zero, but lower levels again.
Yeah. And I think that's the thing is like, my strategy at this point, it's not to get out of the market, but it's to free up some capital so that if, and most likely, I don't want to say when because nothing's guaranteed, but it feels like things are going to go lower. Now, I'm not selling stuff to take my money out of crypto. I just want to get out of some stuff so that I can restructure what I'm holding into some other things that I like long-term with more growth if we do get lower and really reach down into that kind of 20k Bitcoin area. So that's the concept here. It's not for me to scale out of crypto and, oh shit, we're going to zero. Everybody freak out, zero's coming. It's not about that. It's more about just making sure that I've got some leeway to accumulate more when we do get lower, if we get lower.
So let's show you a strategy for this. Let's show you a strategy so you can position your stablecoin portfolio and position your holdings so that you're not going to get wrecked if we do go lower. Now, I said this on my Twitter the other day, and I think this is really the point we want to emphasize, to start the show. It's, remember that feeling. Remember the feeling on those super red days, the feeling of Luna going to zero, the feeling of Bitcoin crashing to 27. And during these pumps, remember that panic and remember that fear. I mean, don't let current market conditions, if we get a small pump, like we've seen over the last couple of days, we see these massive green candles. Don't use these as an excuse to suddenly flip euphoric. You want to keep in the back of your mind, the feeling of the market crashing, because rallies in a bear market aren't the time to suddenly get euphoric. They're actually a time to clean up your portfolio and exit any coins that were giving you sleepless nights. So this is a chance. Every pump we get is now a chance to reposition yourself. It's a chance to position yourself for, potential downside and make sure you're only holding quality and you're not holding projects that aren't going to survive. And we are going to go through some of those projects individually in this show. But before we go into the individual projects and whether we think they will survive, I wanted to talk quickly about this graphic that you made up for us. And this kind of highlights the selling strategy.
Yeah. And I think also just with the bouncing, with the up and down days at the moment, and that what from your tweet a second ago, I think, like the sentiment changes really quickly at the moment because all of a sudden we get one green candle and everyone goes off. But again, like you said, it's not the time to think that we're going up back to 69,000 because it's going to be a while before that happens. And so you're right with what you were saying in that you just be careful not to get caught up in the sentiment of Twitter and of everything else that's going on, because one green day and it feels like all of a sudden we're back in a bull market, but we're just not, right? We're miles away from that. So that's kind of where this strategy came from, which is the one that you had, that you were showing a second ago.
Yeah, I'll show it now.
Yeah. So it's kind of like you're basically doing it. It's almost a reverse structure of your folio, right? So I'm not going to be selling any Bitcoin or Ethereum no matter what, right? That's just long term.
That's in your hodl bag.
Yeah, that's totally my hodl bag. And then I've got a bunch of like kind of L1 and L2 projects that I really, or L0s, however you want to look at it, that I really believe in long term. Now, I ideally don't want to be selling these probably. That's my point of view, except it could be good to free up a little bit of capital out of these things if they get on a good run, so that if we do get a big dump again, then I can accumulate more of them at a lower level.
So I think this is, this is the important thing. You have to be splitting up your portfolio into segments. So I split mine up into 3 segments. The first segment is this hodl bag, which I will never sell these projects. So obviously, you've got Bitcoin, Ethereum. Like obviously I'd sell if, we hit crazy levels, but they're kind of more of a savings account. Then the next structure, the next tier, you've got some of these other projects, like some of these L1s that we're showing on the screen, like Solana, Matic, Polkadot, and AVAX. Now these projects I actually do view as longer term holds, because I believe that at least one of these or multiple of these kind of infrastructure projects or L1 projects are going to be very prominent in the future. So I want to hold the majority of them, but I'm willing to take small profits, or at least chop profits off during these rallies to ensure that I've got stable coins. And then the third tier is obviously, you know, those lower cap projects. And this is more of a swing trading section of my portfolio, which I'm not actively DCAing into. I'm more swing trading it. So in this market, I'll DCA into Bitcoin. I'll DCA into Ethereum. I'll even make a small play, maybe 30% of my total DCAs into the L1s right now, because that's, you know, where the safer money's going. But then the smaller section of my portfolio, these smaller caps, that's where you want to be more rash with your sells. And we see this kind of reflects it here. If we do get, you know, a relief rally, you want to be selling, you know, some of these riskier projects. Now, we're not saying Floki or Jewel or, you know,
we're not saying. I think it's what's important to note about those is what we're saying. I guess is that we've all been left holding something that we bought thinking it was going to go 1000x, right? So everyone's holding something that's down a lot because during that run, the euphoria kicks in, and you're like, yeah, great. I mean, I know you and I have got the same story with Floki. We both bought it super low. I think I did better off it than you did. Like I bought it at. I think I bought $300 worth of Floki and sold out at about $5,000. But I got when the 300 had turned into $5,000, I sold out $2,500, and then now it's back to $5 or something like that.
Man,
right?
My story is crazy. I mean, I'll just share this on the show real quick. I put in like $1,000. So, you know, I just put in 1,000. I thought, look, it's a bit of a riskier bet. Let's see what I can do. That 1,000 went to, I think, 10,000. So I was like, okay, you know, I took $1,000 profit, and then it crashed. So I put in another 1,000. So I put in 2,000 total, thinking, all right, this is a bit of a riskier bet. It's dropped. Let me get in. Then it proceeded to do like a 20x, and that 2,000 had become close to 40,000. I've forgotten what it was at its peak, like 38 grand or something. And I took out like, you know, I thought I was being real smart. I took out like $5,000 profits because I thought, all right, I'll take 5K off the table. I've essentially now tripled my money. So, you know, I've still made a 3x, but then I was like, no, I'm going to ride the other 30 to 100 because, you know, I'm not cashing out till 6 figures. And then it went from 30 all the way back down to like, I think it's like now $800. So yes, I made a 3x, but in theory, I should have really made a 15x because whenever my principal doubled, I should have been taking money off the table. And I mean, you learn lessons from those things. That was just one of my dumb experiences.
I think anyone who's been in crypto long enough has experienced that at one point or another, right? So no one's, you know, I don't reckon you've invested in crypto properly until you've experienced that.
I think a lot of us now have.
I think everyone has.
Especially, I mean, whether you're in Luna, UST,
exactly.
It's been happening a lot recently.
Yeah. So I think that's kind of with those lower level charts. Now, we're not saying any of them are good or bad. We're just saying that these are the ones that could potentially fall into that concept of scaling out more of if we get a relief bounce. I see someone in there saying that that Moonriver doesn't belong with those other projects on that graph. Now, it's not about the fact that Moonriver is on parallel as far as a project is concerned with Floki and Doge, because it's not. It's a much better project. But the fact is that it fluctuates huge amounts. And right now it's down a few 100% probably. And if we do get a bigger...
It's not possible, but you mean 300% to its highest, 95%.
Yeah, sorry. Yeah. I mean, it's a three. It was, what was it? It got up to like $100. It's $20 now.
$400.
$400. So yeah, it's huge. I mean, that's massive. So it's not about that being on the same type of project. It's about the fact that if we do get a relief pump, it'll spring pretty hard. And then if we do get a bigger dump after that, then it'll dump really hard.
It's all about market cap, guys. Like repositioning your portfolio. Obviously it has to do with fundamentals, but we're mostly looking at the market caps and the volatility indexes to work out how these projects are responding to both pumps and dumps. You'll see RUNE, for example. RUNE pumps super hard during these pumps, and it dumps very hard as well because it has a reflexive mechanism with its TVL. So something like a RUNE, that is a great long-term hold. I want more and more RUNE because I believe in the project. But, you know, you have to be cognizant of the fact that it will pump and dump harder than other projects due to A, its market cap, and 2, its tokenomics. So you have to be just aware of which projects you're kind of scaling in and out of, because, you know, if you can manage to take some money off the table out of some of these projects when they pump, then you're going to have more capital to buy back in when they dump back harder. Yeah. So you're kind of you're accumulating more of the token you want to accumulate.
Yeah, and that's the important part. And you got to look at it like You're not going to be getting out completely, because I think that's just silly for anyone, because we never know what's going to happen, right? So we could get this massive turnaround that everyone's hoping. Let's say, you know, the midterm elections kick off in the US and Biden's doing horribly. So they turn the money printer back on. All of a sudden money starts flowing like crazy again. Boom, share markets pump, everything goes up, right? Now, you don't want to be on the back end. You don't know. You don't want to be on the back end of missing that. So don't, you know, get out of what you don't believe in, which is kind of what we're saying, and get more out of the things that have these bigger movements, so that there's that opportunity if it arises. But in saying that, you don't want to be left holding nothing in case things turn around. So don't be silly about it. Don't go all one way or all another, because that's just going to be, that's setting yourself up for disaster.
So right now, what are you actively buying? Are you DCAing into these larger caps? What are you looking at scaling into? Are you looking at getting out?
In the last, I have been scaling in still at this point. That's what I'm doing at the moment. I've been buying, I think I've just been buying Bitcoin, and I've read it a lot as well. It's funny how these kind of bear market moments, they breed Bitcoin maximalists, because everyone comes in for the alts thinking they're going to make a shit ton of money, and then they end up realizing that Bitcoin's the safest play. And so for me right now, it's about balancing Bitcoin to the rest of my portfolio, because I was alt heavy. So that's what I'm buying. But what I'm looking to, I mean, if you grab up that list, we've made a good list of things that, like this graph right here. I mean, Bitcoin and Ethereum, I'm definitely not going to be selling any of those two. I've got a lot of Ethereum already, so I'm not going to be scaling into more Ethereum, but I want to level up my Bitcoin and Ethereum holdings, so I'm buying more of Bitcoin.
So I'm the same with you in that respect. DCAing into Bitcoin and Ethereum, because frankly, with these two projects, we know they're going to be around in a few years. So I'm not fussed whether I have to DCA in at higher or lower levels. I just want to accumulate over time. If they go lower, that's even better for me long term, because I have genuine conviction. And that constitutes the majority of my DCAs for that reason. I'm scaling in more heavily into Ethereum at the moment, just because proportionate to my Bitcoin holdings, I'm a little underweight. I think I'm probably 70-30 Bitcoin, Ethereum. I want to get close to 50-50 ahead of the merge this year, because, you know, I think if successful, that'll be, you know, quite a big catalyst for the Ethereum network. Obviously, there are risks when it comes to, you know, such a big migration of their consensus, but overall, I'm more bullish than I am bearish on the merge. So I'm accumulating Ethereum. And then, as I said before, these other L1s, I'm just nibbling at. So I need to keep stablecoins on the side, at least 30 to 40% for if this market continues to tank. If we go to 24 and we range in this range, altcoins will get hammered, right? So you can't be in a position where you've got no stables. So I'm nibbling at your dots. I'm nibbling at Solana at this level, AVAX, but just enough to keep my portfolio happy in case we get a relief bounce, but not enough to deplete stables to the point that I don't have buying power if the market goes real low.
With all of those tokens, though, my kind of strategy at the moment is I am staking. I'm staking Solana. I'm staking Polkadot. I'm staking AVAX. I'm staking Polygon, or Matic, sorry. And I'm getting, probably on average about 20% for each of them on various different platforms. So for me, I'm not looking to buy more of those at the moment, because I'm still actually accumulating, and I'm not selling any of them at the moment. But I will look, if we get a relief rally, at selling a little bit of each. So I'm kind of doing the reverse structure, because I've got stables on the side, and because I'm earning that yield just in those tokens, I'll probably look at maybe scaling out of what I'm earning on the yield side as we get a relief pump, and holding on to what I had originally. And that's kind of my strategy, that if we go the other way downwards, then I'll have that cash to buy more into those. But if we go up, I'm still holding what I had originally from a few months ago.
It's a good strategy as well. And I think it kind of highlights, if you're not getting involved in some of these farms, whether that's decentralized or centralized farming, that's definitely something to consider. Because if you are going to be scaling into, let's say, an Ethereum or a DOT long term, then, you know, why not maximize your holdings with 30% yield? And at the very worst, you take out stable coins and you have more dry powder. At the very best, you accumulate through compounding at lower levels. So I've done a lot of videos this week on it, just in case you wanted to see my Polkadot 35% strategy. I did that yesterday. And if you want my Ethereum 17% strategy, then I did that the day before. So there's a DOT and an ETH strategy that I gave you guys this week in terms of DeFi. So I think that's really good as well. Just I'm getting
17% with Matic right now. Also, I was going to say that the link, a lot of people were talking about link in the chat as well. And Link with that whole new, I mean, I've got a bunch of Link that I'm hanging to stake. So I'm super excited about this.
Just in case you guys didn't know, like Link has been quiet for a while. Like the price action kind of suggests that as well. It's been kind of stagnating for a while. It's kind of look, Link was one of the only ones to perform very well during the last bear market. So when things were bearish in 2019, 2020, Link was rocketing because its fundamentals basically,
utility is huge. Yeah,
utility is massive on Link.
Yeah, you can't have DeFi without Link. It's as simple as that. And Link has the share of the market. The lion's share of that market, they've got it wrapped up.
They've got it wrapped up. So it's a token that we know has a great economic moat, has great utility. So I love it long term, but the narrative didn't really favor it because although the Link token is fantastic, I think it didn't really have great value accrual mechanisms to actually incentivize people to hold and stake Link. Thus, the Link team has been working for quite a while and they took their time with this, but they finally announced their Chainlink Economics 2.0 incentive program and staking program, which is going to basically have introduced staking at a 5% rate to begin with, a partner growth program, and basically a complete overhaul of their tokenomics to incentivize people to actually hold and stake Link. So I think it's a massive shift for Link because we know the project's great. We know it has utility, but now it finally, has some of the tokenomic qualms that I had that's starting to shore up a little bit. So if you want to check out this thread, it's on my Twitter. I retweeted DeFi Drew's explanation of Link. We won't go through it today, but I think it's a good one.
With that as well, that 5% you'll be getting on Link from their validators, that's going to open up a whole world of DeFi from restaking and from compounders and all the rest of it. So there's bound to be from this, there'll be a whole bunch of DeFi strategies that open up because now they've basically got their own staking mechanism. Then people will bridge off the back of that, but they'll run off the back of that to create their own DeFi applications that work with that. So it's going to be awesome for Link overall.
Guy said, are you wearing his bathrobe? I am. Look, I got my initials here.
It's his pimp robe.
It's my initials on the robe. I'm wearing my robe. Yeah, it's so freezing in Melbourne. We're both in Melbourne actually now.
It's freezing cold here.
Cold. Like not even a jumper does it justice. So I rug up with thermals, like bathrobes now to try and stay warm in the morning for these shows.
My head is freezing.
Cold. Yeah, I need to get a beanie. I got my hair's still wet from my shower.
No, your hair's too nice. Yeah.
My hair's
okay,
pretty,
cool.
You reckon?
Yeah, way too nice. So then what else is on there that we wanted to talk about as well? So Chainlink is great. Okay. Oh, Fantom. Everyone's talking about Fantom in the chat.
There's quite a lot. So I think what we do now is we run through our portfolio and just address some of these coins. I know a lot of you hold Solana, a lot of you hold Fantom, a lot of you hold AVAX. Let's just kind of run through some of our thoughts on some of these major projects. Do they constitute the sell part? Do they constitute the DCA part? Kind of just run through it all. So let's start with Fantom. There's a lot of questions.
Yeah, cool. I say for me, Fantom kind of falls under that same category from the chart that I made with AVAX, Polkadot, Solana, and whatever. I mean, it's an L1. So for me, it's got its own ecosystem. It's got its great tech. It's got its huge community. All the rest of it. I really like some of the other stuff that's coming out of Fantom as well. I particularly like Tomb, and I'm a big supporter of Tomb and T-Shares and Harry.
Tomb, controversial.
I know. I'm very controversial in that, but they're building a lot of stuff. They've got a lot of things happening. They've got their Felix exchange. They've got Life that they're building. They've got the Tomb Swap stuff. They've got Base. They've got Fanti coming out soon. They're building games within the new Tomb ecosystem. So I like that. And I think that Fantom and all of those things are going to prosper off the back of that kind of stuff. So for me, Fantom's in that same category because I think it's got a lot of legs. What about you?
Let me give you my thoughts.
Yeah,
I'm sure people will be interested to hear my thoughts. So I've kind of although yours are great as well, don't get me wrong. But I mean, I have a few, and this could be an entire Fantom video because you guys know I'm quite involved with the Fantom ecosystem. And I talk to a lot of the developers, guys in the space. A couple issues with Fantom first, and then I'll get into the goods. First issue is lack of VC backing becomes quite apparent in bear markets. We know how important VCs are in terms of setting projects up for success, providing them runway, providing them strategic partnerships to grow. I think what's happened is the FDN has kind of taken a bit of a passive approach in terms of, bringing on outside partnerships. I don't know what's going inside the foundation politically, but it seems like the foundation is kind of averse to taking the marketing typical VC approach that an AVAX or a Solana would have. They're more going for organic growth, and what that's done is it's created an amazing community, probably one of the strongest communities in crypto. But that is a double-edged sword, because a very strong community is like something you just can't make up. That is something that has to grow organically, and that's why Fantom has succeeded to this point. Look, the price has dropped. I know most people got in entries way above where it is now, probably myself included now if I averaged up all my DCAs. But, it is a very large market cap. So overall, you have to view it as a success at a $900 million market cap off the back of the community. But when you have such a strong community, that also means that the majority of investors are retail driven. Now, what do we know about DeFi and about crypto? When a project is extremely retail driven, that means it's more volatile, because you don't have that huge backing coming in,
holding,
to kind of underpin those dumps and to prop up the project. So we see that the TVL across Fantom dropped a lot heavier than other projects, because it was retail driven. It had a lot of Ponzi's. It was very speculative. So it dropped 60%. And some of these other projects, although they dropped, they weren't as severe for that reason. Now, this also goes the other way. If the entire market flips more bullish, then I expect Fantom to pump harder, because that's where the community is, the retail is, the development happening on that side. So it's kind of a double-edged sword. So it's becomes a riskier play now. It doesn't quite make my upper echelon of L1s in terms of risk reward because of its downside, but it does make my upper echelon of L1s when it comes to upside. So that is the kind of...
So you've got a little bracket sitting in between the two of my chart. And that's probably sitting in the middle, somewhere in there. So that might fall into kind of like a 60-40 category, maybe, where you kind of scale a little bit out of that and a little bit in. On the other hand, I think that there's so much going on. They're building so much on there. I think that there's been, with losing Andre, that created all this kind of no figurehead to lead the Fantom kind of thing. And I think that's what they're really missing. They're missing that kind of that focal figure that people can pin to, or they can catch on to.
And Harry's gone pretty quiet.
And Harry's gone pretty quiet, but if you follow Tomb, you'll follow all the Tomb Tuesday stuff they do, and you'll follow all the updates they do, and there's a lot going on. And I think also we found a tweet before that kind of related to the peg, and there's a lot of people who always complain about that, and Tomb's worthless until it's at peg with Fantom and all the rest of it, but it's not that far off as far as monetary value is concerned. And there's been a lot of talk from Harry and the team saying that they're just not going to repeg it until... They're not going to focus on repegging it until the volatility is a bit swept out of the market. Until the volatility out of the market's gone, because we're bouncing up and down so much at the moment that why would you spend $6 million trying to peg something back to Fantom when it's just going to go out of peg again because of the volatility?
They want to have real utility, because if they're going to waste $6 million,
exactly,
what's the point?
They want all this stuff built first, and then they'll worry about getting the peg back. So that's why I reckon...
I'm not so worried about Tomb. And in fact, I'm actually not DCing into Fantom now, because you guys know I'm playing it a bit safer with these L1s. I'm holding it. I'm farming it. When I do turn a little bit more risk on, when I think we're getting closer to, a bottom, and I do start accumulating Fantom, because it's one I want to own more of essentially in the long term, then, Tomb is going to be a play where I don't know what percentage of your portfolio you'll allocate. Maybe 20% of your Fantom buys skew towards Tomb, 80 go to Fantom. I think this stuff can really, really help. Felix, the DeFi exchange, you've got ThorChain, their own L2 roll-up for Fantom, which is pretty cool. Tomb Swap, their own DEX, and then LifeSwap, which I think, I'm not too sure what I think about LifeSwap, but overall there's enough coming, enough coming on the Tomb front. I'm not a mega bull.
Fanti as well, which is their exchange that they've built. That's pretty cool.
Yeah, I'm
Oh,
not a
sorry,
mega
that's
bull.
Felix.
Look,
Sorry. Yeah.
Tomb has Ponzi-esque tokenomics. We all know that. I've addressed this before, but at the same time, like from a risk reward perspective, it's very, very low. It could even get to 0.1 or 0.2 per Fantom. So it then just becomes an asymmetrical bet where you just allocate a little bit. If it goes to zero, it goes to zero. But if it does repeg eventually, which it has a strong likelihood of doing, don't get me wrong. In fact, I think there's a very strong likelihood it repegs, then you'll make multiples on that trade.
I'm doing the same thing with that as what I was saying before about the others. I'm literally just staking and I'm just recompounding at the moment with all of this stuff and looking at potentially accumulating that way while still keeping my cash on the side for if we do have a drop. So that's kind of the strategy that I'm doing with these types of things. And then if we do get that relief bounce again, I'll scale out a little bit of what I've been accumulating via yield.
And we're seeing an interesting shift. I think BEETS, which is another project on Fantom, we saw that they announced that they were bridging to optimism because, these projects, that they want runway, they want other avenues to pursue growth beyond one chain. And I think overall this is bullish for BEETS in general because, it gives them a little more scope for growth now that they're on another chain.
Yeah. I've always liked BEETS as one of the better projects on Fantom along with Liquid Driver. So I think it's good. And I kind of think it's good for everyone because it kind of shows that, I think cross-chain is better for all of these projects long-term. So the more of them that kind of start moving out to other chains, the better off everyone's going to be because that cross-pollination is going to benefit the entire ecosystem.
All right, let's talk about the biggest scam in crypto.
Here we go.
This chart. Oh no, I'm seeing a lot of comments. I want to talk about it.
Yeah.
Risky business. It's the Luna price. It's under $2 now. I said
it's under two now.
Under two. I don't hold this. Oh, it's 2. It's
Oh my god. I haven't looked.
Okay, I got my airdrop and I flicked it.
I did too.
Basically.
Sorry.
And you flicked yours. Look, I've done a few tweets on this. I won't harp on about it. I'm not very bullish on the future of the Luna chain. I would personally just rather a fresh start and forget about all this rubbish. I do like Kajira. I like Astro as protocols. I know Kajira is launching on their own chain. Astro's still on Luna too, but we may see a migration happen at some point. But let's just not even discuss this. While we're on the subject of Luna, maybe we talk about some meme coins because they're also some of the riskier plays. Do you think when we get close to a bottom, that you'll be kind of buying some of these memes, maybe a little bit of a Shiba, maybe a Doge?
I am a flat out effing degen. I'm not going to swear because apparently we're not allowed to swear on YouTube or something like that. But
you get shadow banned.
I have got a small portion of allocation set aside to buy a whole bunch of shit. And I've allocated that now. Absolute rubbish that I am going to look at. And I think
I love this chart, baby. It's tasty.
I think that Shib and Doge fall into that absolute shit category. And I have a small allocation of my money, which I like to call just my play cash, that I don't look at as an investment. It's a risk. It's a gamble. And these are the types of things that fall into it. And we've all done it before, but now I've really set aside a structure in doing that. And that is that I have a certain portion of cash and it's a very small portion. And it's basically, I look at it on par as with like massive leverage trading. It's just a fucking gamble. Oh, sorry. It's just a gamble.
All right. Well, we just got demonetized, but that's all right. It means no ads for all of you guys without YouTube Premium.
Sorry.
The market cap on Doge is 10 billion, which is like, that's still pretty high in my opinion. So like these things could go much lower. Like I'm not a proponent of like buying these meme coins. But at the bottom of the market, like I might make a little play on a Doge, but these are the exact examples of projects that if they do get these temporary pumps when the market goes up, these are the ones you want to scale a little bit out of because they're going to be your much riskier type projects. So
if we get any relief on something like I've got a little bit of Doge and I've got a little bit of Floki still. If we get even semi-release on those things, I'll get out of those pretty much completely, I think, and I'll kind of just wait on the sidelines for real capitulation if it happens.
All right. Well, since you're making me feel dirty with all the meme coin talk, I wanted to kind of pivot to the real message of this video, and that is that bear markets may not be good for our bags, but they're undeniably good for the longevity of the space. Now, what it's doing right now is we're seeing the ultimate cleanse of the market. We're seeing Ponzi separated from utility. We're seeing the hype being weeded out. So the real retail mania that was driving the market is now being stripped away, and we're being left with the fundamentals that will ultimately prevail. The projects that have the strongest fundamentals, the ones that aren't just driven by retail speculation. And I think this is forcing the space to evolve and grow. And I kind of use this analogy here. It's like, a caterpillar turning into a butterfly, because it's kind of like a true cleanse of the market.
The metamorphosis of the crypto space.
A metamorphosis, exactly. So,
the crypto space.
I'm bullish on bear. This doesn't really sound right, but I'm bullish on bear markets because they are going to add more longevity to the space long term. I think it forces positive regulation, through some of the disasters that have happened recently as well. So look, I think ultimately the space evolving and growing is a good thing. And obviously it has its negatives, like, lost trust from a retail perspective. Maybe VCs struggle to, fund, as much capital to invest in these startups. So maybe that hampers development. There's always negatives, but the positive is that we are going to see fundamentals prevail. And when I look at a Doge, that doesn't scream fundamentals, but it does scream make a quick buck maybe. But look, if you're in Doge, you're in a casino basically.
Yeah, and I think that's the same with any of those things, right? I mean, look, even Shiba, even though they're trying to build stuff out and whatnot, those are the types of things that you kind of want to. The fundamentals aren't great. Let's put it that way. So it's a weird one.
Maybe we should quick fire through some things where the fundamentals are great.
Okay.
And
let's quick fire though. Yeah.
Quick fire round.
Quick fire round. Go for it.
Near protocol.
Yay.
Amazing. I mean, I love it. VC backing, lots of funding, incentives programs, brilliant.
Yep.
Good staking strategies. ThorChain.
Definitely cross-chain, massive narrative, huge up and down potential based on the what was it? I forgot what it was.
It's value
called.
capture. It's a
Value
reflexive.
capture. Yeah, the way the pool builds and decreases, I think is really good. Definitely yes for me.
Arweave.
Yes.
Sorry, I got to butt in. Big yes.
Go.
Look at this.
Yeah.
Just look at this. Look at this Delphi Digital Arweave graph here. The Arweave Weave space, which is the total amount of storage they store, has grown to over 65 terabytes of data, 8x since April, 8x in a year. Bundles massively increased the accessibility and usability of the chain. So this is when bundles were implemented, which was their latest iteration of the Arweave tech. And since then, we've just seen the total storage keep increasing.
Yeah.
Okay, Arweave does store a lot of data for Solana. So obviously, if there's issues with Sol, it probably hits Arweave storage a little bit. However, they also have a Polkadot partnership, which not a lot of people talk about. They also just partner with another project. I'm forgetting the name. They just had another few strategic partnerships as well. I'll get that statistic later. So they're continuing to, pioneer the way for storage in this space. I'm a big, Arweave bull. Frax shares. I like Frax shares. Do you know much about it?
It's a no for me. Yeah, it's a no for me on Frax. I think that the concept of the stable coin working in tandem with the actual share, it's basically just a Luna concept, albeit it's set up differently. They've got more collateral. They've got, but that value capture concept between the two is just too risky, I think, for almost anyone who understands it now moving forward.
Well,
and I think this kind of falls.
I know what you're
saying. It falls into a category where it's kind of like it's not quite one way, it's not quite the other. And I think that anything that's in that kind of bracket is going to suffer from now onwards after what happens.
I know what you're saying. I get the point with the algo stablecoin argument, but we have to remember that Frax is 70% collateralized, and Luna was basically like less than 5% collateralized.
Yeah, but it's not going to stop a bank run, man. That's not. I mean.
Well,
I don't think 70%.
They have too much utility. Frax has too much utility. And that's the real reason why I like it. They are basically geared towards pure utility. I don't think UST had any utility beyond the anchor. Like, that's the main difference here. So I am bullish on Frax long term.
Yeah. Okay.
We can have a discussion after the show if you want me to run you through some stuff. But I get the argument. I'm not accumulating this now, but it's definitely on my list for a reason. And I mean, it's up 15% for the day. So someone's onto something.
Yeah.
Someone's seeing something here. Yeah, it is up for the day. So just quickly before we end the show, there's two things we want to show you.
Yeah.
There's this major chart that we want to show you. If I haven't deleted it, which would not be good. And I also want to answer some questions. So let me just see if I can find this chart. In the meantime, do you want to answer some questions from the chat? So ask your Q&As in the comments, and we'll just run through rapid fire through a few altcoins while I get up this.
So someone's got dot question mark. We spoke about dot earlier, so definitely there. Someone's also written something about you shilling Fantom. I reckon that's silly. Like, we have Fantom in our portfolios. No one shills anything on here. We just talk about what we hold and what we don't hold. Yeah, I think it's overused.
Yeah, I don't really want to touch on the word shill, but it's way overused. Shill is a concerted effort to deceive someone in a scammy or deceitful way. Nothing about sharing a project you genuinely believe in and sharing fundamentals with the community it constitutes as shilling or scamming. It's a silly comment. And we only I'm not advised by Fantom. I've never been paid by Fantom. I've never and that's the same for basically every project. So every project, in fact. So,
someone said, where do you guys live in Melbourne? We both live south side. Let's just leave it at that.
I mean, they're going to narrow us down here.
Narrow it down. Here it is. You got it. Yeah,
I got it. So this is the chart we wanted to show you. This is the
chart we found.
Yeah, do you want to run us through what this means? Because it just looks like
it's an open. Yeah, okay. So basically in the middle, you've got the Bitcoin price moving up and down. Now the lines top and bottom, they're the open orders at the moment for Bitcoin in specific price ranges. So this chart is really useful in explaining why we're stuck in this range, because there's open orders for over 2,500 Bitcoin at around that 31, 32 range. And then there's open orders to buy Bitcoin at around 28, 25. And again, it's going to be who runs out first. And that will ultimately determine what the next major move is in price. But right now, a lot of people are using this chart to just trade the range, which has been happening. And eventually one of these is going to outweigh the next. So, I mean, whether or not it's the buy or the sell, obviously that's pretty straightforward. But all these orders, one side will eventually run out before the other. And that's when we're going to get our first major move. Now, at the moment, it's still sitting pretty even. So it feels like we're going to keep getting this accumulation between these two figures for a little bit longer.
Yeah, exactly. So basically it's the buy wall, it's the sell wall. And I mean, this is one kind of chart that I think we all need to be looking at, in order to determine where kind of the strength is going to come in for this market. Kind of indicates that there's enough of a buy wall to kind of prop up this region for the short term. That could potentially be the springboard for this rally we've been talking about. But when that occurs is really the question now. It's like, how much more downside do you get in the meantime before a spring? If there is a spring, which I think there probably will be. That's really the question.
Yeah, cool. So then what else have we got in here from questions? Adam, what do you reckon of Atom? I mean, I know you've been a fan of that, probably more so than me.
Look, I really like Atom. The thing with Atom is it's kind of like an L0. It is a very developed ecosystem. There's a lot of great projects built on top of it. Injective Protocol is an example. There's many, many more as well. So I really like Cosmos. The SDK is great. I do understand its value capture, but I kind of sometimes question whether the price action of Atom truly reflects the ecosystem. Similar to like the AVAX subnet argument, it probably doesn't capture value as efficiently as some of these other projects. However, long term, I think it's a very good play, and it's one that I never really got much of an entry on. But it's definitely one that's on my watch list. As something that I'll start adding eventually. I would say it's a pretty safe bet. It's probably in line with like a Polkadot in terms of like one of those major L0s that can scale and is quite interoperable.
So someone's got here, any thoughts on Coty? Now, I don't know much about Coty. I've not really looked into it. I know that, and I think a lot of people are talking about ADA as well. So I think ADA is awesome, but I just think they're just lagging as far as they haven't got enough stuff out yet, really. But as far as
the Vassal hard fork's the real reason they were pumping. And I'll get up the ADA chart here. They were pumping because obviously the fork's taking place. A lot of TVL started to come onto the ecosystem. However, I think what we've experienced is just a very a very slow way for an L1 to get off the ground. I think Charles, he is playing the long game in the sense that he wants to make sure the tech is right. It's like, I guess you could make the argument Cardano's objectively more decentralized than a lot of these other L1s. However, its lack of growth in the short term to command such a crazy valuation has always been my issue with ADA. And that isn't like, I really actually do like the tech. I like Charles' vision. I watched his whiteboard video and I thought, it was fascinating. And I do like the ecosystem and some of these other projects underneath it. You've got some of the DEXs like AdaSwap. You've got Coty, which is the payments rail, which, I quite like because I don't think there are enough payments facilitators in this market, especially not in the Cardano ecosystem. So overall, I do actually like ADA. I don't like the valuation. And I just wish it was a $5 billion market cap because then I'd be like, okay, this is a great play.
And so with that as well, I think Cody's going to be the reason why Cody and ADA are so attached now is because of the stablecoin, right? So the stablecoin's working. Cody is supplying the stablecoin that's going to be running on the back on ADA's network. That's the main gist of it, I think. So when ADA gets a pump, I think Cody effectively should follow, right? Like that's kind of the way it would work in my eyes, whether or not.
It'll probably work like that. That's roughly how it works with these eco coins. This guy said my Moonbeam bag is stacked. I mean, this goes back to the conversation of Polkadot. Like if DOT really has this
massive
the run that we expected to have in the next cycle because of the interoperability narrative, then we're gonna see the EVM compatible L1s like Moonbeam. Obviously you've got like Asta, you've got Moonriver on Kusama. Those will probably perform well. And Moonbeam's probably my favorite of the lot because it's it's probably the most reasonably valued one. And it's also the one that the one that's most active now in terms of its ecosystem. I had a chat to the team at Consensus in Permissionless in Miami as well.
Yeah, I think DOT for me is my biggest kind of long-term bet at the moment. As far as risk versus reward is concerned, I think that the upside for DOT is going to be massive. I think they've been held back by like their user interface at the moment is just rubbish. As far as Polkadot's concerned, the Polkadot JS wallet is probably one of the worst functioning wallets out there.
That's getting better with the
hang on, hear me out, because I reckon that the big turnaround for DOT is going to be when they restructure all their UI and their wallets and they try and make it more user friendly. And once they get that right, I reckon you'll find that's when DOT will absolutely pump. So for me, I'm stacking DOT and I'm stacking bits and pieces of the ecosystem as well. But I'm waiting for that time when they announce that kind of next kind of UI update, that user interface update, which is going to make it easier for people to understand. Because even DeFi experts like you and me, I struggle on DOT. It's so hard to wrap your head around. Once you get it, it makes a lot of sense and it works really, really well and it's super cheap and it's really stable, but it's super hard to get your head around it in the beginning.
Lineway said you should look over the tokenomics before you talk about Moonriver or Moonbeam. Use the word shill, which, that's up to your discretion. But cool. In terms of tokenomics, I think Moonriver certainly looks better from, an unlock perspective. I know Moonbeam had those massive unlocks. We're starting to see them kind of taper down, though, if you look at the Masari unlock schedule. But I do agree Moonbeam still has like a 3 or a 4x till it reaches its total supply. So Moonbeam's tokenomics are structured in the favor of VCs. Not a bad thing, because it doesn't affect the fundamentals of the project. What it probably does affect is the short-term price performance of the GLMR token. So yes, Moonriver in the short term is probably more sound tokenomics wise.
Some of you guys in the comments are classics. But anyway, hey, I have to bail, guys. I've got to go. I've got an appointment that I have to get to. So I'm going to have to love everybody and leave everybody. And thanks everyone for listening. Thanks for having me, Miles. And I'll speak to you guys soon.
Thanks very much for joining the show. I appreciate it.
Have fun.
See you later.
See you guys. Bye.
So just quickly, there's a lot of questions coming in now. We've got questions on Luna, DOT, Ethereum. So I want to answer some of these questions. So I'm going to go over to my Instagram, Miles_Deutscher, and answer questions live on Instagram right now. So I'll be starting a live there. And also I'll be following you back if you follow me. I'll I'll be following a few people back as well. My internet's not loading here, but yeah, I'll follow some people back. Let's have a Q&A on Insta. I love the Instagram lives. We get to hang out, we get to chill. I love these lives as well, but it'll be cool to answer some more Q&As because I can talk all day, and I will happily talk all day if you want me to, but let's switch platforms before this is a 5-hour stream. All right, I'll see you guys in the next show. Peace out.